Right, now let's shift focus to India. Now, India's oil firms have lived through a full cycle in just the last 3 years. Record losses, record profits, sharp reversal and renewed uncertainty. Their fortunes remain hostage to the same ancient calculus. The price of crude set far beyond India's borders and the political calculus of what fuel price-sensitive Indians pay at the pump. In a world of volatile black coal, the only certainty is more wild gyrations ahead. India's Petroleum Minister Hardeep Singh Puri, while assuring of fuel supply and enough reserves to last at least 2 months, raised concerns over the steep losses for oil marketing companies from the Iran-led crude spike of over 50%. For context, oil firms are staring at under-recoveries of up to 20 trillion rupees or $21 billion, with losses expected to scale to about 10 trillion rupees. The cause is a familiar one. Fuel and LPG prices remain state-controlled, below market costs, eating into margins. Refiners have seen their share prices fall by up to 27% as the West Asia tensions they have pushed oil prices above $100 a barrel, reshuffling the deck once more.
My oil companies are losing 1,000 crores a day. Their under recoveries are in the tune of nearly 1,98,000. So we will have to start worrying about these things, and in that we should. Some demand for LPG has come down. It used to be 90,000 metric ton. It has come down to 75. Some of it is because of the temperature. But even otherwise, I think prudent supply and demand side, we have done very well, and I have no reason to believe that we will not do well in the future.
Over the last 3 years, Indian oil firms have seen it all. The year 2023 began with a sense of quiet after the storms. Global oil markets, which had been whipped into a frenzy by Russia's invasion of Ukraine in 2022, started to settle. Brent crude averaged around $82 per barrel across the year, remarkably close to forecast. However, the journey was anything but smooth. For India's state-owned oil giants, 2023 was a year of spectacular recovery, having bled through most of 2022 by selling petrol, diesel and LPG below cost while global crude prices soared. These companies finally found relief as crude softened and they held retail prices firm. Indian oil retailers collectively reported record profits totaling about 81,000 crore rupees in the FY 2023 to 24. That was well above their annual earnings of over 39,000 crore rupees in the pre-COVID crisis years. Then came 2024. Brent ended the year about 3% lower, finishing at around $74 per barrel. While Indian oil firms posted significant profits in FY25, it was a steep slide from the blockbuster earnings in FY24. Despite the volatility in recent quarters, combined profits of Indian oil firms have more than doubled. So Puri's latest concern on oil firms' losses and Prime Minister Modi's appeal for economic nationalism and the measures, they have sparked a fierce public debate. Market analyst Deepak Shenoy highlighted that India's largest fuel retailer had collectively earned crores of rupees in profits in recent years, even as ordinary consumers saw little relief at fuel pumps during last 3 years of lower global crude price. He pointedly questioned over the last 3 years who made money, the government and the oil companies. Shenoy said that the math shows oil firms can manage the current spike, and he added that while global crude softened, retail prices in India held firm. Excise duties and taxes have been unchanged since May 2022, meaning that during low crude costs over the last 4 years, fuel price cuts were not passed on proportionally to Indian consumers. Shenoy said that the surplus has quietly flown into government coffers and company balance sheets, and he added that this reflects India's crude equation rarely balances in the consumer's favor.